Dude, it's been a while. I feel like we're like we haven't done a roundup in a couple of weeks.
Yeah, it's been obviously we covered did some specific episodes, not roundups around FriendTech. That was last week. We had a regulatory pod, and I think there's been some activity, but not a ton, I would say. But I think we have a good content and material to talk about during this roundup for Permissionless.
All right, man. Here's what I want to talk about. I want to talk about FriendTech. We did that episode with Ansem that I thought was pretty interesting. It's been a couple days since then, so I just want to do a quick update there. We have Tornado Cash. Then there's an interesting collaboration between Solana and Shopify that happened, and then Coinbase made an investment in Circle, and that has some implications for USDC. So we'll try to talk about all of that. We'll see if we get to it. First thing is FriendTech. I'd love to just get your not before we look at Dune, before we look at the transaction data and all that kind of stuff. Would love to just get your thoughts on that episode and the last 2 days, and if you've thought more about that.
Yeah, I thought it was a good episode. It forced me to think about kind of hold two conflicting ideas at once in my head on one. And then I looked at the comments and the feedback from people, and a lot of people reached out, said, "Oh, I would have expected you to go on there." And I still, a part of me, first of all, I think it's very positive. From an onboarding perspective, from a usability perspective, it's gotten a lot of traction, over 100,000 users. I think you were the one that mentioned this, but the flow, of course, it's on Base. And I'm very bullish on Base as being a very net positive for this space. But it sounds to me like, and I haven't gone through it, but a lot of the episode, I wanted to get your thoughts on how easy it was to get initiated, to bridge, and to get started. And that's really important because I think that is in and of itself really positive that now we are getting closer and closer to, even before account abstraction, the state of the world where it's just really easy to use these apps. Putting aside my thoughts around is it good or bad around betting and having speculating on influencers, is it the right implementation of that? I'm not sure. I actually lean negative on that. But the idea of, and I think you and I both agree on this, which is it feels like the relationship between the content creator and their fan base ought to be reinvented in a more direct, intimate way. I'm not sure this is the right implementation. And I referenced things like Steemit and BitClout and other prior iterations of that and compared it to stablecoins. Fascinating, but don't work really, or haven't.
Not stablecoins, algorithmic stablecoins.
Algorithmic stablecoins, yes. But yeah, look, I'll pause in a minute, but I think net, I still haven't signed up. I'm very curious in terms of the activity that's happening there, and you shared a Dune dashboard right before this episode, and we'll cover that here. But yeah, that's so that's my thinking.
Yeah, the biggest breakthrough for me has been it feels like the future of connection with fan connection with either artists or celebs or even just founders that you enjoy following and other people and things like that. It's really fun to be in in Rob, Rob Leshner's chat, for example, chilling in Leshner's chat and people are just talking about different things. And his chat is very focused on just kind of shooting the shit about news. And then you go into Disclosure's chat and there's only 50 people in Disclosure's chat. And he's showing behind the scenes of how he just made this song. And it's really cool. And then you go into someone else's chat and you're they're doing trading strategies. And I'm nah, I don't really care about the trading strategies. I'm going to sell this. Now they don't call them shares. They call them keys.
Keys, right.
Keys. So I don't know. Is it FriendTech the future of that connection? Is that the platform? I have no idea, but it does feel like there's this unlock about connecting with fans. And it's made me think about there are some baseball players, there's some football players, some basketball players, some artists that I would love if they got on the platform. I would buy their keys instantly, not because I think their price is going to go up, which was my original thought of this allows you to go long on people that you enjoy. It's actually this access point that things like Patreon and I still think of OnlyFans as just like this porn platform still, but like I'm sure it's evolved into more than that. But like I don't think either Patreon or
Patreon.
OnlyFans have nailed that. And yeah,
Hugely successful businesses, by the way.
hugely. Yeah.
Yeah. No, I agree with you. Like the access thing is very interesting. And so one of the things that was brought up during the episode was, and I asked the question, like, what would be the things that you would change? And it sounds like video and general chat, because right now the chat is direct only, right? Like you don't have access to, it's like not an open chat between all the key holders and
That's the biggest
owner,
problem of the whole platform right now, is that you have to, and there's this like workaround, which is people are basically saying, so you'll ask a question in my chat, or you'll say, hey, like you'll ask some question, and I have to say like, hey, Santi just asked this question, quote, and then I respond to it. So I actually saw, so I have the keys to some Blockworks people, and I saw one of our analysts, this guy Matt, he got this question. It was like, he did the retweet quote thing. He's like, hey, who do you like more, Mike or Jason? I was like, oh, he's not going to answer that, is he? And sure enough, he answered it. But it was a smart move. He said he likes both of us. So that was I was like, all right, you passed that test. But it did get me thinking. I was like, man, like, what else are people saying about Blockworks on here, or like what's happening in these like private chats? So it did get me thinking.
Yeah, absolutely. The thing that gives me pause is sort of unlike other platforms like Patreon, is this kind of constant price feed, and the implications that it may have on just, thinking of worth. Certainly there's a lot of criticism on social media. That social media has created more anxiety and for folks. And is this net positive? In many ways it is. I could see a world where some people become really obsessed with the price and demoralized, if you will, in a similar manner as NFT collections, right, have really gone down in value. I think technology is neutral, but certainly, it doesn't feel good. It feels great if your price goes up. Let's just be honest. Probably doesn't feel as good if your price crashes. And so, yeah, it's just going to be interesting to observe. I tweeted out and said I would love to see a correlation between like the number of followers in other platforms, particularly Twitter, and how that is translated into the price of the key on FriendTech. Because as you pointed out in the episode, there are certain people that don't have many followers on Twitter, but on FriendTech, they are actually widely popular.
I think it's influence. People, I think I think there's a strong correlation between what people perceive someone's influence and power in their space to be, and then less so their followers.
Which it's interesting because, as we've known on some of the traditional platforms, like there's a lot of bots. Historically, people have paid for followers, and so it is. This certainly is more a real, it's a market, right? And so there's money behind it. So you understand true influence, I guess, and interest in a particular person. And it allows for, I guess the upside case is that it would allow up and coming people that are putting out good content, or just generally, to be discovered, because markets tend to be way more efficient in discovering value. Right. And that the gap between real value and discoverability like really compresses. Right. And so, whereas in social media platforms, traditionally, like there's a lot of accounts that you're like, well, probably paid for those, or they're a bunch of bots. And so, it's,
the other, so you said, it gets you excited when your price goes up, or maybe gets you demoralized when your price goes down. Actually I had an interesting thing happen this morning, which is every Friday they give out the airdrop points. So these points that are off chain but will eventually impact an airdrop. And I really haven't been playing with this app to get an airdrop. Like that hasn't even crossed my mind really. However, this morning I didn't get any points, and I was kind of pissed off. Right, I was kind of pissed off because I was like, oh, I've been using this app a lot. Why didn't I get any points? And it's interesting to see. I've only thought of airdrops and points and these kind of things as like positive reinforcement mechanisms. I've never thought about them actually as negative reinforcement mechanisms, where you might have some good users, but if they didn't get what they feel is their worth, then it actually disincentivizes them to use it. So anyways, we can look at this Dune chart. I mean, these transactions have completely fallen off the table. So if you look at before August 18th, transactions were kind of sitting around 1,500 a day. By August 21st, they had peaked at 38,000 transactions in a day. That chart is now down only since the 21st, and they are now down to 2,000 transactions, almost back to the original levels. So these are some, I mean, just very bearish charts, I would say. But sellers is catching up to buyers. Money that went into the platform is now streaming out of the platform.
Is that okay?
This is actually inflow.
That's just
per
inflows.
day.
Inflows continue to be positive, but what's the outflow? Like the net flow, is that negative?
No, I think it's still positive,
right?
Yeah.
So look, I mean, I think still money is coming in, and when I say money, it's more like users are coming in, although at a slower rate.
Yeah.
And what's interesting is total protocol fees is what you were just showing it, but it's north of 3 million or so. A portion of which it gets shared with the key owner. Some people like
3.5 million. Yeah.
3.5 million. And that's aggregate. That gets split amongst the protocol developers, the team, and then the key holders, right? So folks like Kobe have made 80 ETH or so. I think you were saying in the episode.
Exactly. So anyways, it'll be interesting to follow it.
Yeah, overall, I mean, this is zooming out a little bit. Obviously, Base, people should go listen to. There's 2 episodes that we've recorded with Jesse, who's one of the lead kind of leaders within Coinbase to spearhead that effort. And we recorded the second one right before they were launching, and this kind of on-chain summer. And Base is part of that, where it's been getting a lot of traction, and so that's good to see. Is this the just generally my thinking is that Base is going to be incredibly positive for the space. It will allow people to venture into this world in a I'm looking at over 100 million users of Coinbase that potentially are going to venture into Web3 and have applications and access that. So that for me is really the most important thing, and something that I will continue to monitor, and probably we'll talk in this episode.
Yeah. Base just hit 16 transactions a second, surpassed ETH. Pretty remarkable. I mean, hats off to the Base team, right? A week or two after, or however long it's been live, already passed ETH. So hats off. Where do you want to go next? Let's talk Tornado, I think.
Yeah, that's a development that came out yesterday. We're recording today, Thursday, so that was Wednesday.
Yeah, so the update for folks, I can share it right here. DOJ just arrested Tornado Cash co-founder Roman Storm, and a couple other folks were involved in this piece. I don't know if you were able to read the piece, but and there are OFAC sanctions against Roman Semenov as well. The two, let me just read some of the Blockworks piece. 2 co-founders of Tornado Cash were charged with U.S. federal money laundering and sanctions violations on Wednesday. One of the co-founders, Roman Semenov, was additionally added to the Office of Foreign Assets Control's specially designated nationals list. Roman Storm, who's the other co-founder, they're both deemed responsible for laundering upwards of $1 billion in criminal proceeds through the mixing service, which, if you guys haven't used Tornado before, it's this mixing service. That's that. I mean, that's kind of the update. The first important thing I think to understand is that the U.S. government only attributed 7% of the activity in Tornado Cash to illegal activity. They continue to kind of make this claim in the piece that the quote unquote majority is illicit, but they only attribute 7% of the activity in Tornado Cash to illegal activity. And so then I think that begs the question, well, what are they really going after here? Why is this? Why are they really going after this if it's 93% is legal activity? And I think the key to the government's argument here, this account Seth for Privacy had a great thread on it. the key to the government's argument now is profit instead of custody. Their previous key argument in precedent cases was about the custody of these funds. Now it's about the profit. And there was this piece where they talked about the Torn token, the Tornado Cash token, and I think without Torn, I doubt there's a case to be made at all here. And I think this case is kind of turning from custody and illegal activity, and they've started to realize that maybe there hasn't been as much illegal activity happening on this platform as they once thought. I think the court is now going to start to focus on the profit motives, as there was this kind of maybe as they would call it, clear profit motive at stake for the founders indicted here. So I don't know. I think it's a pivotal moment here. I think it's a real shame. I'm sure I'll get some backlash for this, but I think it's a real shame to go after Tornado Cash. And I think that this, I would call it neutral tech, should be able to remain standing. And I think that you should go after the bad actors. You shouldn't go after the platforms that enable the bad actors. And I think we're seeing this is Napster 2.0. This is Ross Ulbricht all over again. Like this is, I think we're going after the wrong folks here.
I agree. It's a very pivotal moment in terms of privacy, which is, fundamental, right in my mind. And there's a couple of things that people way smarter than I have commented and brought attention to. One is the idea between, developing code and publishing code, and the implications that may have, or historically hasn't had. And this obviously is not an example of that precedent. And the nuance here is that, these developers, they sort of burned the keys at some point. And then, for people, that just sort of means that they're not able to take down the protocol. Like once you burn the keys, like it's out in the wild, like you deployed this working thing and it's just going to live on forever. And so you don't have control over making modifications. No one can really kind of force your hand. But then there are some arguments that like they've thought about changing the front end and making some things like that was, I think, a big part of what I will think be what gets argued in court. Their motive and their intention, or what they could have not done because they, at one point just burned the keys. So that was going to be interesting to follow. Some folks were pretty witty and just framing an analogy saying, hey, messaging services or car developers. Okay, well, there's, certain illicit activity happens and people are using messaging services to communicate. Does that make you liable? If you developed a car and cars get used by, criminals, does that also make you liable? Like, where does it stop? I think a big part of going back to your original comment that, that the 6% number is low is a lot of it in part of enabling what is a very clear enemy of the state, which is in the OFAC sanctions, which is North Korea. Like the Lazarus Group has been behind very large hacks of certain protocols, like Ronin and a few others, and they've used Tornado to kind of launder these funds. And I think that's in my thinking, that's probably the biggest issue here, which is you're basically, have allowed a clear enemy of the state to use a piece of technology, Tornado Cash, to get funding. And that's very problematic, right? And so I think that's a large motivator. I won't say all of it, but you can't know for sure. But I think that's a big piece of it, right?
Yeah, exactly. I think it, this has to go to the courts, obviously, but like this would set a horrible precedent, right? It would kind of allow this stretching of the term money transmission, and it would really expand the reach of these KYC AML laws to practically every non-custodial privacy tool. And if you think about that, maybe that even includes atomic swaps, right? Maybe it includes non-custodial DEXs, right? And I think this logic that a non-custodial service has to implement KYC AML without prior precedent or legal impetus for this is just this absurd claim. But it would but if it got pushed through the courts, like it would have a very negative impact on DeFi.
Yeah, absolutely.
Yeah.
Yeah. I remember when this first came out, this was months ago, right? One of the founders got put in jail Alex, I believe, who resides in the Netherlands. He got put in jail and then released, I think, on bail. And we brought on, we talked about it in the regulatory episodes. We will talk about it, when we have, Rebecca and Jake back again, around what is the precedent, right? As you mentioned, like where is that placed in other DeFi apps? And I think that's sometimes, they go after a specific kind of this feels certainly more on the edge, right? Which is, closer to enabling like just laundering and just, funds, if you will. But then that sets a really bad precedent for some like, Uniswap and other AMMs and whatnot. So yeah, it has unintended consequences, second order effects. I think it will be heavily, argued in court and probably peeled back to some extent, as a hope, at least.
I think here's my concluding thoughts on this is that I think that it comes down to whether or not you believe technology itself is morally neutral or is a good or a bad thing. And for me, I think technology itself is morally neutral, right? It can be used for good or for bad, depending on the intentions and the actions of the people who create and use it. And I don't think developers of technology are inherently evil or good oftentimes. And I think that the responsibility lies with those who choose to use technology unethically, right? For example, like a cyber criminal who hacks into a private data is more culpable than the programmer who made the hacking tools. And I think a lot of people might bring up the Oppenheimer example with nuclear technology. I don't think the person who pioneered nuclear energy is inherently evil. Maybe someone who creates bombs or who drops bombs might be evil, but someone who uses nuclear energy to power a city is a good person. Or maybe you could also look at algorithms, right? Developers who create algorithms to maximize engagement. I wouldn't say they're evil, but maybe companies that enable algorithms to spread misinformation, I would say they're not doing a good thing. But then there are also companies that use algorithms in a good way. So
the key is intent and motive. And I think that's what's going to be the point here in the defense and the argument in court, which is you could argue that the motivation here was to have privacy. And I think, reasonably speaking, you want to have privacy. You have privacy in the financial system. Like, it is vital to be able to have the possibility to have privacy in a crypto context. And that is, I think that is a valid defense. And so, we'll see. I think it's going to be very interesting how this gets interpreted and resolved in court, if you will.
Yeah. I'm in this chat with some different crypto founders, and one of them posted this thing that I've been thinking about this morning, which is he said it makes a lot of us in this industry who are agnostic to the use cases of the technology we build think twice about whether we could potentially be scapegoats if a bad actor uses such technology for evil. This then limits innovation. And I've just been thinking about that this morning. So.
Yeah, absolutely.
Hey everyone, we'll get back to Empire in just a minute, but before we do that, I want to let you know that we have Permissionless coming up. Permissionless is a big conference that Blockworks and Bankless put on together. It is the biggest, the best DeFi conference in crypto. This year, it is in Austin, Texas, September 11th through 13th. If you've been in crypto for a while, you know that bear market conferences are the best kind of conferences. We have a phenomenal lineup of speakers. A lot of the guests that you hear on Empire are both going to be speaking there. You will have the opportunity to meet them there. And a lot of the topics that we cover on Empire, ZK Tech, rollups, account abstraction, MEV, app chain thesis, a lot of that kind of stuff, that will all be discussed at Permissionless this year. So because you are a listener of Empire, you get a special discount. That's right. Santi and I negotiated with our marketing team. You get 30% off if you go to blockworks.com/permissionless. Empire 30 is going to get you 30% off your ticket. Today, when I'm recording this, that's about $300 off your ticket. So type in Empire 30 when buying your permissionless ticket. You get about $300 off. Click the link at the bottom of this episode. It's in the show notes. Do it quickly because prices go up all the time. And if you are going to Permissionless, hit me up. Let me know. Shoot me a DM on Twitter. I would love to meet up with you there. All right, let's look at the Coinbase Circle deal. So, pretty exciting announcement between Jeremy Allaire and Brian Armstrong, or really Circle and Coinbase this week, which is that Coinbase has now taken a stake in Circle and, quote, commits to the long-term success of USDC. So, if you remember, USDC was actually created by this consortium, or I guess this partnership between Circle and Coinbase a couple years ago. Now, Coinbase has bought an equity stake in Circle, and there's a couple changes that come from that. First, with this new approach to the partnership, the two are shuttering the Center Consortium, which is this group that I mentioned, this governance group that was created 5 years ago to oversee USDC. And Circle is actually bringing the governance and the operations of USDC in-house. So that's one big update. The second update is that USDC is now going to launch on 6 new chains. So they're on a couple of chains right now. Between September and October, USDC is going to launch on Base, Near, Optimism, Polkadot, Polygon, and I think Cosmos. So yeah, pretty exciting. Pretty exciting for Circle and for Coinbase.
Yeah, I think there was also a piece of like the net interest income that they receive being split.
Yeah, let me read that because that was
was
actually
pretty
very
interesting.
bullish for Coinbase.
Right. Yeah, that's what I was thinking. Yeah.
So let me
Yeah.
pull this up somewhere. Here, I got it right here. The revenue will continue to be shared based on the amount of USDC held on each of our platforms. And additionally, we will now equally share an interest income generated from the broader distribution and usage of USDC. That's what you're talking about?
Right. Yeah.
Yeah.
I mean, the comp here is
Pretty
Tether. I mean,
sizable.
Tether is one of the largest holders of treasuries in the world, more so than a lot of sovereigns. I mean, I think it's a top 10 holder. Holds more treasuries in like certain countries, and it is. I think their latest reporting. I mean, it is making a sizable amount of yield on those treasuries, and so in a similar manner, you can think about that being an important line item in Coinbase's financials over time. The the thing that some people might argue is the dominance of USDC has gone down, and I don't really know or can explain that candidly. I don't know if you've seen some analysis to point to as to why that is, but certainly like the USDC as a percentage of like all stable coins has gone down. Tether continues to go up. And so maybe this is them launching in 6 different chains reignites their growth and their kind of position in the broader stablecoin market.
Yeah, I don't know. I don't really know why it's been going down, but I agree. Yeah, I'm surprised Coinbase's stock hasn't changed, or that the outlook for Q3 is unchanged here. Between this announcement and Base, gotta imagine like.
Well, I mean, this goes back to the point of I fundamentally believe the markets are not efficient, and that sometimes, and you would argue, we're more connected now. There's access to information more so than ever before, but sometimes things go. The coverage that you get. A lot of the market is passive, right? Like you have a growing share of just flows going through passive mutual funds like Fidelities of the world that are not very actively managed, and they're not paying. Maybe they're not paying attention to it, or they don't understand the full story. And so it's sort of like, what do you believe in that others don't? What do you understand that others don't? And so, I mean, a full disclosure, I've been looking at Coinbase stock for a while. I have exposure to it. I think and then it rallied a ton once Baupost, which is one of the smartest, I think, guys out there. When you think about smart guys in the room, like Seth Klarman, incredibly smart. He heads up Baupost, and they bought the bonds, and they were trading at like they dipped all the way to 40 cents on the dollar. Now they're trading at like 62 cents. Coinbase is now tendering those bonds. I think they have 1 billion bonds outstanding with a 3.25 coupon. They're tendering, which means they want to buy back those bonds at like 67 cents, and they're not getting any interest from investors. And so, not surprising. I mean, I think these are sort of things. Of course, credit story is different than an equity story. Like owning a bond is very different than owning a stock. But yeah, I think I think this is a prime example of the market may sometimes just does not understand the story.
Yeah.
And it goes through like not just crypto, by the way, just over time, there have been pockets of the market that are just not understood by analysts. You can argue nuclear has gone through that phase.
I still
so
think
really,
I still think Wall Street thinks of Coinbase as just a crypto exchange, and they think about Wall Street as a
they're
crypto
like, look,
exchange where we're in a world where fees
volume
are
is
going
down a
down.
ton.
Yeah.
The fees are going down. Volume is down. It's in a bear market. There's no interest, which is true, but they don't appreciate, maybe the business model just goes through an entire transformation where it becomes more of, fees attached to subscriptions and, base and sequencer revenue and that and interest income from the stablecoin.
Right.
And so that just changes, right? And so anyways.
So I have a maybe a personal question for you. I don't know if you're comfortable sharing this. When you buy Coinbase and you're talking about these bonds, like, do you buy the bonds? Do you buy the stock? How do you think about that?
Well, it's a great question. I mean, it depends on the price. It really fundamentally I'm of the mind, and I truly believe, I ascribe to Howard Marks, which is the founder of Oaktree. His whole thinking is price is the big determinant. You could buy a great company at a terrible price, makes for a bad investment. You could buy a terrible company at a great price, makes for a fantastic investment. And so I started looking more closely at Coinbase when it dipped to like close to $30, $32, $33, and the bonds were like really going. When there's an excessive amount of negativity and everyone's calling for like, something's dead, I just go to that and I pay attention to that. And that was what ultimately led me to Coinbase. The question that I've always asked over time, people, is as you think about interest in this space, how are people going to allocate in their portfolio if they want crypto exposure? Absent an ETF, Coinbase is an important avenue to do that. And so as I think about my overall crypto portfolio, Coinbase is an interesting way to get exposure to just how the overall market will play. They're them wanting crypto exposure. And so yeah, that was, I didn't buy the bonds. I just haven't been a credit guy my entire life. I thought they were interesting. I talked to a bunch of other folks around it. My rationing back then was I'd rather just have exposure to the equity. And I didn't actually invest directly in the equity. I think I mentioned this in a prior episode. I did it through like a complex structure where it's called like a Phoenix note. It's quite popular. And basically, it's like a structured note where I'm getting paid a very high coupon with a barrier. So that essentially says like, today the price is at $70, right? And you say, okay, it gets issued today. You have downside protection, meaning if the stock doesn't go down 30% or 40%, you're getting paid a quarterly coupon. And at the end in 6 months, it can be called. It's usually a year of maturity. And so what happens if the price of Coinbase stays within a range of the strike, like the issue price and the barrier, which is lower, then you get paid that coupon. If it dips below that, then you actually get settled in shares and you end up owning Coinbase shares.
It's like an option.
Yeah, but you're getting paid a super high coupon because it's a very volatile name. So the coupon on this thing is like 30, 40, 50%. So what is that? So my thinking was, and just this is a strategy that I've been deploying in my entire portfolio, which is I'm not like, do I like it at this price? I don't know. But would I like it 30% lower? Absolutely. And in the meantime, if I'm getting paid a really high coupon, I just cost average my way down. And this is something that I've played around in for the last year and a half, because generally I'm uneasy where equities are trading. And so it's a great way to get income while also potentially, if it dips below that, I just think my margin of safety, going back to what Seth Klarman talks about, like I love the possibility of just owning something 20, 30, 40% lower than what it is now. If I don't end up owning it, I still get a really high coupon. Great. And so I minimize kind of my opportunity cost.
That's smart. I always thought Phoenix notes were were a type of bond that was issued by a company emerging from bankruptcy, but I might be wrong there.
No. Well, this,
No.
yeah. No. Maybe, I
Interesting.
don't know.
All right, that's good to know. I have another question for you on Coinbase, which
Important
is
reminder that none of this is financial advice, by the
yeah,
way,
yeah,
folks.
right. Well, I have another question for you here. What are the main reasons why a company would buy back their bonds?
Well, because they're buying it at the, if they issued a nominal like at $1, right? The
Right,
principal is $1 billion, but they're buying back, like they're repaying that debt, and they're essentially like saving 300 million bucks.
right.
Like you're buying that debt at a discount. You're terminating that, so you effectively got 30% for free. It's a real
Yep.
low coupon, to be fair.
Yeah.
Like it's paying like 3.25. If they were to issue those bonds again, they were not. That coupon would be much, much, much higher. I think
Yeah,
they
yeah,
issued
yeah.
those bonds right when they were going public. There's a lot of interest. So the
Yeah, that
stock was
makes
like at
sense. Yeah,
300,
they get to
400.
reduce the debt, they get to reduce the
Yeah,
future interest costs, manage the bond maturities, kind of yeah. It also probably sends kind of signals
a strong
financial strength
signal.
to the market. Yeah, it helps increase
Yeah,
future earnings by retiring the bond. But if you
yeah,
retire
but
the
you
bond
retire
early.
debt at
Yeah.
at 60 cents on the dollar. Well, you just got a bunch of money for free.
Yeah, yeah. Interesting. All right, last cool thing that happened this week. Shopify enabled USDC payments via Solana Pay integration. Um, there was a good tweet by a Circle guy. Hold on, let me pull this up.
Yeah, which basically talks about like the
Or
the,
or
the
he can
percentage
pay
of fees
yeah,
that
oh,
are
yeah, okay,
charged.
Patrick Hansen. So Patrick Hansen
Patrick, yeah.
is director EU strategy and policy at Circle. So he said Shopify accounts for 10%, which is just a crazy number, 10% of total US e-commerce and 444 billion dollars worth of global economic activity. The average cost per transaction using Solana Pay and USDC is 0.00025. So
Yeah,
we're
de
looking at
minimis.
0.025 cents versus roughly 2% credit card fees on Shopify, which if anyone's ever used Shopify before, it's usually more like 3 to 4%. So
Yeah,
yeah, I think it's pretty
yeah,
interesting. What do you think? What do you make of this? Because if you remember,
absolutely.
this was I feel like I've seen this before, right? I feel like do you remember in 2018 when Coinbase turned on like e-commerce stuff and they launched crypto payments? And so my first thing was like, yeah, I've seen this before. But then my second thing was, yeah, but in 2018 we didn't have tens of
You didn't.
billions of dollars of stable coins
Right,
outstanding. It was no one
right,
was
right.
buying things in Bitcoin and ETH, right?
You didn't
Now that
even
we have
have USDC back then, I believe.
right, right. So I
Yeah.
think actually
No,
2018 might
it's
have been the
it's hugely
year.
bullish.
Yeah. So it is.
I'm
What
look. I think the question is, the skeptic here might say, well, like merchants are not going to want this thing called stablecoin USDC. But I think over time that's just going to prove to be. I think the adoption of USDC is incredibly bullish. Payments is something that is one of those areas that is easy to dismiss, to your point, because it hasn't worked before. Like Coinbase Commerce shut down, it didn't get enough steam, but I think credibly payments with stablecoins should be a massive component of crypto usage and adoption. Like it's just people wanting to not hold local currencies because of the volatility, and they want to have dollars. Well, you can do that very easily with stablecoins. Basically, a digital dollar. The USDC is held like there's a dollar that is held in a bank account. You get comfortable with Coinbase and how they do it and the counterparty risk. Well, it's backed dollar for dollar in a bank account. Like it's when they publish a reserve, they publish kind of who their counterparties are, and so I think
hmm,
it's very interesting. I think to your point, a lot of times it is important to revisit things that you were bullish on and your thesis from back. And because something hasn't worked before doesn't mean it won't work again, particularly how fast technology changes. And the environment is different this time. And so I think certainly like with Solana versus ETH, the transaction fees are very, very low. One of the biggest criticisms back then, before Solana and Ethereum, was, well, wait a minute, like gas fees are really high. And then that 2%, 3%, while true, it's actually in certain instances, the gas fee on the layer one was very high, $8, $9, $12. And the spikes really made it difficult, right? To see a world where you would have billions of e-commerce flow going through an L1. Well, now you have an L2, and now you have a cheaper environment like Solana. Well, okay, well, that's very different. Where you're not only at parity, you're actually way below that 2-3%
hmm,
per transaction. So on the absolute cost, and so that's quite different.
yeah. Here would be my skeptic's take. My skeptic's take is that the if you look at the 3% fees that Shopify takes or 2% fees that Shopify takes, we're all assuming that that is an infrastructure cost, right? We're all assuming that the infrastructure that they have, those 2% fees go to covering the technology, hardware, software, personnel, infrastructure costs required to operate a payments network. And by using USDC or crypto, you bring down those infrastructure costs. There's a bucket though that those fee there's another big bucket though that I think people in crypto maybe don't talk about, which is the risk fees. And these are the fees that account for a significant portion, I think, of the payment fees of the 2%. Because when a financial institution takes on payments, they're also taking on the risk and liability of processing those payments, right? And so
Like the settlement, right?
the settlement rate,
It
but
being
also like
reversed and
the risk
clearing.
fee, the like 2 or 3% fees help cover the costs related to things like fraud prevention,
Yep.
verification, payment
Yep. Yep.
reversals, chargebacks, things like that. And so that is not something that this solves, right? So
Well, no, hold on there. It actually does, right? Because these transactions are absolute. Like they're settled. The finality is there. Like when you think about fraud, no, it doesn't happen. Like what is like basically not the primary. This is not
I
meant
see
to
what
be
you're
the
saying. You
primary
can't
like
call up Bank
banking.
of America and
Like
say this was
like
a
interchange fees.
yeah.
Like the whole banking system is a clusterfuck of patchwork of things that have been developed since the '60s and just put together, and you keep adding on top of this patchwork that is highly inefficient, and the communications slow and the settlement slow, and so all of that introduces risk, right? But think about like when you're paying, you're swiping your credit card, the merchant doesn't get the money immediately, and these your credit card pays them net 20 and net 30 depending on the size of the merchant, and then what happens on the back end is sort of these two banks need to talk to each other, make sure you have your money and all this sort of stuff. That's where there's incredible amount of fees, interchange fee and merchant fee and all these sort of things to cover for these possible risks and also just
Yeah.
processing overhead. But when you're settling a stablecoin, like it's like you're transferring a stablecoin, there's no
Yeah, it's
there's
final.
no
And there's no
it's
KYC.
there's
Yeah, yeah.
finality.
Yeah, yeah.
Well, you could have KYC, that's separate. But the reality is like there's no fraud. Like there's no like it's sort of the settlement is instantaneous or near instantaneous and it's final. And the working capital component for merchants is also hugely impactful. Like they're getting that money immediately. So anyways, there's a whole host of things why settling in stablecoin. If you're a merchant, very interesting. I think there is a category in crypto that will emerge, which is the reward component by using this mechanism. Um, right now you don't get points if you're using your USDC, but I think there's an opportunity for someone to come in here and say, "Hey, we're going to give you points for using USDC." If you're settling on this, right? And presumably a merchant might give you a discount because why? Because instead of compared to when they would much rather get the stablecoin, right? If they have a very clear, like if they can swap USDC for dollars very quickly on Coinbase, if you're the merchant, or you're getting that money immediately, you're not waiting 20, 30 days to get that money from American Express or Visa. And if that's the case, then they should just issue you, Jason, if you're swiping with a Gnosis Safe card, right, Visa, and you're immediately transferring that USDC to the merchant, the working capital, like the present value of that is higher, and so they can offer you a discount, right, some reward or whatever. And so that whole category is going to probably is nascent, but I think will become more and more important to incentivize people to use this mechanism because the merchant would much rather get that money immediately. It's hugely beneficial. Small businesses get crushed by credit card. This is why
Yeah.
the famous Amex doesn't work in Europe because or they only take because Amex is notoriously known for really having bad terms, especially for smaller merchants, which need it
Yeah.
the most. The working capital piece makes or breaks your operation. So, anyways, this is going to be
Yeah.
very important for e-commerce, I think.
Yeah. Little secret. They do take Amex. They just get crushed on the fees too much.
Yeah, they do. They do. Like
They do.
they have a
They do.
terminal. They just don't
They
want
do
you to
take
use it.
Amex.
They'd rather
They just
they'd
refuse
much
to
rather
procure
use
Amex.
you Visa or pay cash, right?
Yeah.
Well, a lot of
There-
people
there-
want just
there's
cash because they
actually
want to obfuscate.
there's actually an
transactions.
amazing the best piece I've read about this is by David Marcus, who was head of Messenger at Facebook and
Yeah,
then became
yeah.
head of Novi and was running their stablecoin and then left to build this thing in the Lightning space. We should actually really have David on, but he wrote a piece in 2019 called why building a new protocol for money is the only way to truly change the game for people. It's a quick read. It's like 5 minutes. I'm gonna link it in the show notes here. But if you really think about the payments, I mean, I'm very excited by this because I think the payments narrative has been dead for years, and I think it's coming back now that USDC and stablecoins are a big thing. And if you look at the current payment system, it's so broken, right? Existing networks like ACH and Swift, they're built in the 70s, 55 years ago,
Yeah, yeah.
and they're closed to outsiders. Wallets, right? Venmo, Cash App, they're not connected. They literally don't talk to each other. Moving money from country to country takes too much time, too much money, too high fees, merchant fees, crazy. And I think stablecoins really do fix that.
Yep.
So, Santi, man, good to be back.
It's great to be back. Yeah. Anything else that we should cover? Any books, documentaries?
Watching this documentary on Netflix about cold callers, the first
Are you really?
the first telemarketing
Oh
business.
God,
Yeah, it's like
that's not something I want to
it is a
watch.
sad. Yeah, the two
It's
things I
just
was like, the two things I had lined up were like that, and then the Jared from Subway documentary where he ends
oh
up being
really?
like a like a child abuser. I think it was. I was like, oh man,
Oh really? Yeah,
I'm going
that's
down
right.
two dark rabbit holes here.
What's going
Um,
on, man? Yeah, I think
but
you
no, I
need to go
told you
watch
I've
Father
been watching
Oppenheimer.
like fellow media company Hodinky. I've been like, I've probably watched 100 hours of Hodinky
Mm,
things, like every talking watches, every like all the John Mayer interviews. They just did this great thing with Ed Sheeran. I've been
yeah,
going
yeah,
deep into the Hodinky rabbit hole.
nice. Yeah,
Yeah,
Chrono 24 is another big company in the space. They just raised. They've been around for a while. They raised some
yeah.
capital from General Atlantic, and I think General Atlantic, but then most recently Cristiano Ronaldo, which is
It's interesting.
hopefully.
Hodinky is this really, I mean, from a media company perspective, I like studying them. They did over 100 million in revenue last year. They
No, it's
started as a
crazy.
watch blog and then they launched the marketplace actually. So it's this really
Yeah,
interesting
so you can
like
transact lots of them.
evolution of like media into e-commerce, which other folks like Meat Eater did 100 million in
Mm,
revenue. They're like a blog into e-commerce. Food 52 does a shit ton of revenue just
yeah,
selling like
yeah, yeah,
pots and pans and stuff. They started as a food blog. So they're
yeah,
all churn and group companies. Churn and group's best in the world at doing this.
absolutely.
Yeah.
Yeah, no,
What are
that's
you reading? What
amazing.
are you watching?
I'm looking at my Kindle right now. I'm reading Anatomy of a Breakthrough. Um, so far, I'm like third of the way out. Interesting. I wouldn't say like earth shattering. Um, it's about like how to get unstuck and like if you have writer's block or found like I don't know. It's interesting. Um, and then I read Mr. China. I think I mentioned this before. It's a book that it was like, you know, written by a guy who was one of the first pioneers in the 90s and early, like turn of the century, raising huge amounts of money in the US to go invest, like private equity money to invest in Chinese businesses and basically got rugged. Um, like raised, I think over billions of dollars and just
Hmm.
like into a bunch of stuff that
Oh, is
ended
this
up
about
working.
Tim Clissold, the British guy?
Believe so. Yes,
Hmm.
yes. So it was like highly recommended, and it was just I'm fascinated by China. I've read a bunch of stuff on it, from Kissinger's book to a few others, and just understanding the psychology. It's a very different market, and so I don't pretend to understand it. I don't speak Mandarin, and but I am fascinated by it.
Hmm.
I think it's a big obviously what they're doing in crypto is interesting now that like the West seems to be like taking a more dogmatic stance to this technology, whereas now China, Hong Kong, Singapore, like the East in general has been more has taken a more pro stance. Statistically speaking, I think we ought to be seeing more projects come out of the region, but we haven't, at least not to my understanding. But I think there are some interesting funds and people out there that that are like
Hmm.
Scroll, for instance, and Step In, like all these projects
Yeah.
are based out there. So yeah, I'm really fascinated by it. I think always studying Asian markets would have been highly beneficial for a lot of people that were dismissive or were thought it was just copycat nations. But I think it's very important, um, particularly like how they've totally leapfrogged, like in the fintech space, like how people interact and how they just the way commerce happens there, like WeChat. Actually, another great book, the story of WeChat
Hmm.
or Tencent, like very interesting. And so, anyways, I'm always kind of curious about books that talk about the region to get an insider perspective and better understanding. So this one was good. Not I expected more because it was so hyped, but it was fun to read.
You know what book I just read that you would love is The Dream of Solomeo by Brunello Cucinelli.
Oh, I've heard about this one.
Yeah, you would really like it. You'd really like it. So I just read that.
Basically, transformed an entire town.
Yeah, it transformed Solomeo, and
Yeah.
it's like he's all about like humanistic capitalism, which is this kind of fluffy thing I think oftentimes when like U.S. folks talk about it, but he's done it well. So it also helps that he can sell a scarf for $8,000. So
it's crazy. Yeah, that brand is
yeah,
pricey.
All right, man.
That's awesome.
Good.
Well, it was a good roundup. Welcome back, sir. It's good to be back, folks.
I forgot to say, we're hiring engineers and salespeople. I was supposed to say that at the very beginning. If you're still listening at this point, you hopefully like Blockworks enough. We're hiring salespeople and we're hiring engineers, full stack.
Is this a lot for the research platform?
We're hiring engineers both on the editorial side of the business and to make our media site better, and then also on the research, analytics, and governance side. We're launching this big thing in 3 weeks at Permissionless. We're really scaling up that platform. And then we're hiring on the sales side for advertising and sponsorships. So if you want to, work with Coinbase's CMO to help them, advertise across our platforms, that's a good one.
Great.
Cool.
That's awesome. All right, folks. Well, thanks for tuning in. As always, drop your comments if you want us to talk about something or you don't like X or Y. Otherwise, we'll be back.
Santi loves those YouTube comments.
I do. I spend an inordinate amount of time looking at comments.
You read you got to start commenting on them.
No, of course.
I feel like it really impacts your day. You're like, someone's like, oh, Santi had a bad haircut. You're like,
this is why you think I'm going to go on FriendTech and see my price collapse? Like, I'll have a mental breakdown. I'm still having mental breakdowns out here reading comments, but so I'm not prepared to go on FriendTech yet.
No.
Brave New World, man.
Yeah, Brave New World. All right, guys. We'll see you next week.
All right. Take care, everyone.